Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, and I'm so excited to be with you. If you've not already, hit that subscribe button on YouTube, BitChute, SoundCloud, or get on your podcast feed and subscribe. We have an old friend of mine, bit of a what do you call this? A man crush here, Graham Neary, a man I got to meet in Ireland in my brief stint there. He is the founder and editor of Monopoly Investor, which is a financial publication. He's based in Ireland, but he has a broad set of interests, and he gives some material for free, some for subscribers. So check him out. We'll obviously put his link in the show notes. Now, he has written 2 saucy articles this week, and you have to read them. The first one that came out discusses the explosion in altcoins, and the second it examines the notion that cryptocurrencies can be this digital store of value or digital gold. So, Graham, welcome to the show. And why did you feel the need to address topics that really you're a Nocoiner? You don't even invest in these things. Why are you going out on a limb and taking them on?
Hi, Fergus. It's a pleasure to be on your show again. So I am a Nocoiner. I'm the sort of person who's a boomer in a younger person's body. I just don't understand modern technology. You know, I'm stuck I'm like Peter Schiff's dad, talking about the gold standard, and I just don't understand modern technology. So I thought I should out myself as that and explain to people why I don't own any Bitcoins, I don't own any cryptocurrency. And even though I've taken a strong interest in the monetary system for, I guess, 10 years or something, I just could never bring myself to buy any crypto tokens. And I'm happy to explore that now in a little bit more depth with you.
Yeah, well, let me just rattle off a number for people here. This Shiba Inu, and who knows how you pronounce these things, has a market cap of $39 billion. And maybe this came out about maybe 4 days ago. And this is the, I guess, partner or companion to the Dogecoin. How on earth is some kind of basically joke worth $39 billion?
Right. And
what is going on?
Yeah, and the hilarious thing is that it's not even an original joke. It's a joke of a joke, because Dogecoin, or Doggycoin, as I like to call it, Dogecoin was invented as a joke.
Yes, yeah.
It has a picture of a funny dog on it. And essentially, Shiba was created as this Doge killer. Another crypto coin with the same dog, a slightly different sort of cartoon, slightly different picture. And it's managed to overtake Dogecoin in market cap. Very big achievement. So it's a derivative of a joke, and it's now worth more than, a lot of excellent companies you could buy. I'm a stock market guy, so I look at company valuations. You just look at something worth $40 billion. You think, well, it's got to be adding happiness and utility to the world.
One example you notice the entire Hilton hotel chain.
That's right.
This little digital joke is worth more than hotels all across the world. It just defies logic sometimes. And I have thought this for a while, that this although the bubble, I wrote about 3 years ago about the bubble in altcoins, and I thought, okay, maybe 1 or 2 of these will actually have a use it someday, but not hundreds upon hundreds or even thousands now. So this is what one of my professors back in Houston's called a beauty pageant stock, that we're just rating it based on looks and not really any substance. And is there going to actually be a popping of this bubble? It seems like it just goes on forever. It's like the old Keynesian line that the markets can stay irrational longer than you can stay, what is it? Oh, anyway. Solvent, that's right. And I thought, this seems to be the case, that irrationality is hanging around for a long time.
Yeah, so we're at the end, or who knows where, but we're in the longest bull market in the history of finance. And the way I interpret the crypto market is, it's like a spillover that people couldn't find enough speculative assets to invest in. So they start pouring into these other assets. Are they a security? Are they a financial asset? What is a crypto coin exactly? I think it's a financial asset. But now we have 14,000 cryptocurrencies or altcoins. And if you go back to the early days of Bitcoin, the white paper, I think, was in 2008, they talked about a cash system. The whole point of it was to create a peer-to-peer electronic system of making payments. Now, that makes sense if you have one cryptocurrency which does that. The whole point of a medium of exchange and money is that there's one of them, and it makes trade understandable because you can denominate the price of everything in that one medium of exchange. With 14,000 cryptocurrencies, it's clearly impossible for more than a handful of them to actually be used widely as a medium of exchange. You would have to assume that nearly all of them will be worth zero eventually. The question is, how long will it take for them to be worth zero? Will it be 1 year, 5 years, 10 years? And how painful will it be when that unwind eventually occurs?
Right. Okay. One, we might say, oh, this is just this youthful exuberance and everyone's getting caught up in buzzwords. Fine. However, the change in the last couple of years is that institutions are jumping on this bandwagon. Why is that happening?
Well, I mean, there's a simple answer to that, which is that this is now an extremely popular mainstream activity, trading crypto. I was reading today that 13% of Americans have been trading crypto over the last year. Now, in total, 24% of Americans trade stocks. So in comparison to the amount of people who trade stocks, it's more than half. This is a mainstream mass idea, and it's absolutely enormous. The market cap of crypto as a space is now $2.7 trillion. That's obviously a huge number. We can compare to try and get a sense of how big that is. The market cap of the entire S&P 500 is 40 trillion. So if we come back to what I was saying about how it's a spillover of speculation, the S&P 500, in my opinion, has become extremely overvalued. The NASDAQ has become even more overvalued. People are desperate for somewhere to put their cash. The Federal Reserve 2 days ago kept interest rates at rock bottom and also maintained asset purchases. They reduced asset purchases a little bit, but the asset purchases are going to continue. And so people are desperate to put their money somewhere. And so now we've got a nearly $3 trillion space of coins, tokens, which could ultimately be worthless. If you compare, if you look for an alternative asset, like I would say a crypto coin is quite similar to the currency you'd find in a video game. There's a lot of video games where you buy a currency in order to be able to do things. Those coins, those video game tokens are arguably more useful than crypto coins, because at least in the video game, you can do something fun with them. The crypto coins are possibly completely useless. And what I worry about is, are we now reaching the point where it's a systemic risk, where if the crypto market collapses, what sort of contagion could that cause? You mentioned about financial institutions getting involved. There's a lot of big institutions which are involved now. And obviously there are companies like Tesla, which have crypto on the balance sheet. If that became more widespread, that would be a source of immense financial risk. Even without crypto, we have immense risk inherent in the stock market now with extreme concentration of the S&P in a smaller number of companies. I think that it's a difficult time. It's possibly the most difficult time ever to look for good long-term investment opportunities, which is what I do. I look for good companies to invest in.
Yeah.
But I have to be honest with people I talk to in the real world and online and say to them, these are crazy markets, and it's very difficult to look for buying opportunities.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
This is the Inventa Capital mining update, and I'm fortunate to speak with Cameron Timstra. He is CEO and president of Tarachi Gold. This headquartered in Vancouver, but on the Canadian Stock Exchange with the TRG ticker symbol. Now, Cameron, there's a lot going on. I know I was obviously looking through your latest releases, two new out. So why don't you go through it? You've got both new results going to your preliminary economic assessment, and you've got a private placement that's just been closed, which is great news. So what are these details?
Yeah, so the private placement we just closed, we closed just over $650,000. Certainly not a big placement by any means, but more for corporate purposes. Just to kind of get us over the finish line with the PEA that we're doing with Ausenco Engineering on our Magistral project right now, to kind of carry us forward into the new year as well. But the bigger news for us, certainly the metallurgy results that we came out with this week, and those are from our Magistral Mill and Tailings project in Durango, Mexico.
Yeah. So what are those results? I mean, are they surprising, or you were confident in these results going into them?
Yeah, they were more sort of confirmatory. There had been some metallurgy work conducted on this project sort of in years past by previous operators, so we had a pretty good understanding of what to expect here. But certainly it's nice to see them come from our own sampling done, and actually to come in a little bit higher than some of the previous work that was done as well. Particularly on the fact that, we can achieve these 80+% gold recoveries on material without having to do any additional grinding work. So it means, typically you need to do additional grinding to sort of extract extra value out from tailings material. But here it's going to be sort of a lower energy input required to actually achieve those 80+% gold recoveries. So that's great.
What is the pitch right now? I mean, first, like you said, you've got these good results. Also, how highly traded are your stocks right now? How easily can people get involved with them? Because I know a lot of these smaller mining companies, it can be difficult to engage with them.
Yeah, we're seeing sort of volumes of around 100,000 shares per day on our CSC there. Obviously, some big swings when we come out with big news and whatnot. But investors can find us on the CSC under the ticker TRG, as well as in the States on the OTCQB, and in Frankfurt for any European investors out there. On the Frankfurt Exchange as well. So we certainly try to make ourselves available to a wide pool of investors. And, we certainly expect to be a little more active now over the next couple of months in terms of news flow and milestones reached. We had a bit of a slow summer because we experienced some pretty significant delays at the labs in getting this metallurgy results back and getting the assay data back from our drill program at Magistral. But now we have the PEA coming out on the horizon here. We expect that to be completed in probably the next 3 weeks or so. So people can expect some good news coming out with that. And then once we have that, we'll have a good idea of what we're going to be doing in terms of our timeline to production and the CapEx required to production as well. We can kind of outline a path towards production from there.
Yeah. So I guess the pitch would be get in before the PEA is out, right? So if you're confident in the project, do so before maybe the institutional buyers will get in more heavily. Also, do you want to give a sense for the timeline of this project? You said there's going to be a lot more information coming out. What is the action ahead?
Yeah, so the game plan for us would be to come out with this PEA at the end of November, sort of use the months of December and January to market that and raise the funding necessary to actually put it back into production, because we do own an existing tailings reprocessing facility here at Magistral. Basically what we have to do is, make some modifications and some upgrades to that facility so we can maximize gold recovery. We expect to use sort of the first 6 months of next year to do most of that CapEx work. We also have to do a bit of work in the tailings storage facility as well to get it ready to receive our tailings from the processing facility. So our expectations right now to be sort of, commissioning the facility probably in the summer of next year. That will depend on whether or not we have to make any more significant modifications or additions to the plant. One of those options is to install a SART facility, which would help us mitigate the presence of copper there and also bring down our cyanide consumption costs pretty dramatically as well and improve the project economics that way. But those facilities would take a little more time to design and install. So that will be, potentially pushing it out an additional quarter. But certainly our game plan is toward the end of next year to be, running at 1,000 tons per day, ramping up to production and expectations of sort of 16,000 plus ounces of gold per year.
Yeah, so in the mining world, you're very close to production. You're really a long way through the process. So that's great news. Okay, yeah, people go to Tarachi Gold. Now, I don't have the URL in front of me, to be frank, but yeah, it's on the Canadian Stock Exchange, TRG, and they have obviously tight releases here, especially if you have a mining background. You'll be able to get details here, but otherwise, Cameron, thanks for being on the show, and I look forward to next time.
Thanks so much. Yeah, keep in touch.
Cheers. Yeah, there's actually a video you prepared maybe 1 month ago about how few companies actually prove profitable in the long run. And I'll look to find that and put that in the show notes as well. It's another one where you dig into the data a bit. So I see this, and it all, like I said, it doesn't make a lot of sense to me, because at the outset, I was and have been a big advocate for alternative currencies, because I see central banks as destabilizing and as a process, as agents of theft, basically. And I was very excited about the fact that we might be able to use just private money. Great. Unfortunately, as you note in your article, there is about a $3 transaction fee associated with cryptocurrencies or with Bitcoin. And then there is a 2.9% fee on Coinbase, which is by far the most used platform or exchange here in the United States. And I think they're expanding internationally as well. So those are just prohibitive. And the idea originally was that private currencies would basically outcompete fiat currencies. And I literally was paying people back in, 2014 or something like that, in cryptocurrencies. But it just became foolish. I can just send Western Union or some kind of bank transfer, and it's cheaper, quicker, and then people don't have to actually go out, because I would send Bitcoin to someone in Ecuador, and the person would have to go out and try to sell it and get US dollars. And went, why don't I just send you US dollars, right? So with that gone, and maybe, and I hope we will get to the point where we actually can use these cryptocurrencies. They will stand on their own 2 feet, but for now they don't. So I guess the point, this is your second article, is headline, Gold has a monopoly on real money. And I guess your point is that, what is the use value of cryptocurrencies? Please tell me.
Yeah, so when somebody says this phrase digital gold, and I include that in the article as well, I analyze the concept of digital gold. Well, what if I said, well, there's not just such a thing as digital gold, there's also digital oil. What would you do with digital oil? Or what would you do with digital pork bellies? Because that's another commodity that's widely traded. These things don't make sense. It's a video game that essentially
people are living in a video game. Yeah,
people are living in a video game. Digital gold is obviously something that makes no sense. It's purely virtual. The whole point of gold is that it's useful. So if you go back to your old school, let's say you study some Austrian economics and you're trying to understand what's the point of all this economic activity, it's about trying to satisfy some human desire. What can a digital coin satisfy? I mean, it's quite clear that a physical coin can satisfy all sorts of desires. Gold is the most useful metal. So if it is melted down, it can be converted into use across a wide range of industries. A digital coin can't. It's ephemeral. It's imaginary. I would welcome, and I need to try and stress this, I would welcome Bitcoin's use as money if that proved to be feasible. And I was very hopeful that that would happen. And that, you read about people buying pizzas with Bitcoin and buying cup of coffee with Bitcoin. If that proves feasible, that would be really useful. But it hasn't proved feasible, and it's been around for quite a long time now. And without that use case, the justification for crypto seems to fall apart, because you have essentially a fiat currency that's not even useful. So then what you're left with is a so-called store of value. But what value can it possibly store if it's completely useless?
Yeah, that analogy to a fiat currency is a good one, because now that fiat currencies are not tied to gold or silver, we just know them as just them. They just stand alone. So coming up with another one that happens to be, let's say, less vulnerable to inflation or to manipulation or whatever, or to, let's say, confiscation, that's great, but it all rests on the fact that it can be used for something. Now, are you actually following these attempts to make Bitcoin Cash or this Lightning Network? And again, I want them to work. They just haven't for some reason. So are you following those developments?
No, I'm not following them closely, but I have I've been keeping an eye on Bitcoin in the background it's been around for 13 years. And Fergus, you and I could have had this exact same conversation a year ago, 3 years ago, 5 years ago. Nothing really has changed for Bitcoin, except the growth in the number of competitors, some of which arguably do have better technology. I think people can make an argument that Ethereum is more useful. And secondly, the valuation has changed. These arguments haven't really changed over the years. It's the same old stuff. I watch Bitcoin go up every week, every month, and I continue to scratch my head.
That's one of the funniest things about it. You go, I'm a Nocoiner, but yet I've watched it just explode in value over a decade. So, and market value. So the one aspect you say, and this is a bit controversial, is that, if we're in this kind of tulip mania scenario, and you might want to short these meme stocks or whatever, I'm not sure what you call them. How does one even go about shorting cryptocurrencies on a practical level? Yeah, do you not want to get into that, or
it sounds? I mean, it's very dangerous to try to short anything in these conditions, and I'm one of the people who is rightly ridiculed on Twitter for attempting to short Tesla. And I'm still short Tesla. Okay, I'm not short as much as I was before. At this stage, it's like about one share that I'm short. It's a widowmaker trade. It's the trade that just destroys hedge funds. But at some point, all of this will turn, I believe. The problem is, how do you avoid blowing up if you attempt to short it and you get the timing wrong? I am just about brave enough to short Tesla. I am not brave enough to short Bitcoin, because I just see it as a random number generator, and in terms of the price of Bitcoin, and the timing is just impossible. And then how do you structure it? That's
my concern too. How do you structure it? I know there are now these cryptocurrency ETFs beginning, so I guess maybe that allows you to get involved. But in general, I wouldn't even know how you go about shorting all these altcoins.
Well, what I would do, and this is not investment advice, but personally, I would look at Coinbase, because that's a crypto platform. And I can understand the financials of a company reasonably well. So if the bottom falls out of this, it's a company like Coinbase that will suffer. And Coinbase has an extremely high valuation now. It's about 10 times sales.
Yeah, the Coinbase valuation is astronomical. I think you have it down here somewhere, but I've lost it. But it is extremely high.
About $70 billion.
Absolutely, to me, absolutely crazy, because people don't seem to realize this, but Coinbase is really its competitive advantage is its capacity to jump through regulatory loopholes or regulatory hoops. So they have been able to somehow, by hiring the smartest lawyers and a big team, to get around all the impediments that the US federal government and states and everybody have put in front of them. And other groups have not. But with time, that's going to come down. People are going to get in. There are going to be other exchanges. So the notion that it's worth tens of billions of dollars to me doesn't make a lot of sense, because it's not that sophisticated. There are all sorts of discount brokers and stock exchanges all over the place in the US. And it's only a matter of time before they get in on this action if the demand stays strong. So that is an interesting perspective. Does it mean, though, that in the long run, obviously this is the gold newsletter, that people will return and say, okay, this has been a flop. Maybe we should try to get some, actual digital gold, actual tokens that are backed by gold. Is that even a thing?
So the idea of digital gold makes sense to me if you have real gold somewhere and then you have a payment system which is built on top of that. So we could do that today. Like if a Western government decided we're going back to the gold standard, they could denominate their currency in gold, and when you go to Starbucks, you would still pay in dollars or euros or whatever, but there could be a gold value underlying that. So that could be a form of digital gold. In terms of gold's prospects, and I do invest in gold myself. The gold market cap for bullion that's currently above the ground is around $11 trillion. So it's still 10 times the market cap of Bitcoin. And it's, I guess, something like 4 times the market cap of the entire crypto space. So a lot of people probably don't realize that even though gold's performance against the US dollar hasn't been very impressive, it's still a huge market. Like, it's still far, far bigger than crypto. So from that perspective, I think you can take some comfort in the sense that crypto is still relatively niche. I suppose the crypto community will see that as an opportunity. They will say, well, if Bitcoin is currently valued at 10% of gold, and if they think Bitcoin is better than gold, then why can't Bitcoin 10x from here? Which is certainly possible. But then you'd have an $11 trillion mountain of Bitcoin, which, I mean, the systemic effects of that would be off the charts. When you try and look back at previous financial eras, 2007 or 1999, like, this is potentially bigger than all of them, because we've got very high house prices.
Is it bigger than the dot-com bubble of 1999, which you referred to in one of your pieces?
I think it has to be. I mean, simply by looking at something like Tesla, which I again have a short position in. Like, you didn't have $1 trillion mountains of companies. Like, Tesla's worth $1 trillion. You didn't have these $1 trillion companies that were arguably worth much, much closer to zero. You had very highly overvalued companies, and you did have worthless companies which had high market caps, but it wasn't anything like $1 trillion valuation attached to these things. So, and of course, back then it was more specialized. Like, you had a tech bubble, fair enough, but we've got a tech bubble now. The Nasdaq was expensive 3 years ago, and it's doubled again since then. So, we've got a tech bubble, we've got crypto, whatever you want to call crypto, we've got bond prices at levels they've never been before, and we've got extremely high house prices like 2007. So we've got everything. Everything is going at the same time. So I think it's the most extreme situation anybody's ever seen. And as I also said in my article, very few people in finance now have good experience of those previous events. Like, even 2007, say 2006, 15 years ago, people's financial careers are more short-lived than you might realize. A lot of people who were senior managers in 2006 have retired since then. And a lot of people who are senior managers now were still in school in 2006. So the amount of experience is actually quite limited. So that's another source of risk, I think.
You make me feel old, Graham. I can't. It's hard to believe sometimes, but I do know the workload in the sector is so high that obviously many people retire early or burn out. So, and it is true though that yes, there was this almost euphoria or this optimism back in the late 90s, but at least there was a value proposition, right? At least there was a clear case that these are trying to sell something. I mean, not always, but in general, there were cases. But this Dogecoin or alternative to Dogecoin, what does that do? I don't get it. So, and another note you make in your article is that no one can really claim in a year or two's time that this was not just speculation, right? I think everybody has to look in the mirror and say that this is a high risk proposition. And that's why you've got even guys like Edward Snowden saying, there's this famous tweet from him. I say this with love, but do you really think you can outsmart a market by buying an imitation of a dog coin? And I was thinking, man, when Edward Snowden is weighing on this, I think we're maybe at the peak of something. Just my take there. And I remember back in 2017 when there was another little popping of the Bitcoin bubble, I had gone back to New Zealand, and my father was asking me about it. And I thought, if my father in the hill country of New Zealand is asking me about Bitcoin, I feel like something's ready to pop. Okay, yeah.
I mean, back in 1999, there were still arguments about why a company would eventually be profitable. And that was when people started to latch on to the idea of eyeballs and addressable market. So the traditional, conventional financial analysis was thrown out the window. Now it's about addressable market, eyeballs, and future monetization. And they weren't very good arguments, but they were arguments. Now all you need to have is literally a picture of a dog, and you can enjoy a huge market cap.
Yeah. Well, on that note, go to look to Graham Neary. He is on Substack. It is monopolyinvestor.substack.com. Of course, we'll have the links to these two articles in the show notes, goldnewslet.com/podcast. Graham, great to chat, mate. Let's hope this gets out before this bubble pops. Okay.
Thanks, Fergus. A pleasure.
See you, man.
Cheers.